Hello, hello. Let me just move this down here. Good morning, everyone. I only have one screen today, so let's just try to make do with this. There's a lot to talk about realistically with what had happened, transpired on the overnight session from the weekend. Hope everyone had a good weekend, and we're back here on Monday with a lot of movement from Friday's close into the Sunday open into today's open, realistically, as Jerome Powell closed out remarks last week on Friday, a little more dovish than expected, which prompted equity markets to soar like crazy. Now, there's another thing here to look at on the screen. We have gold, right? Gold futures that popped aggressively into an all-time high as a lot of traders and investors are speculating into earlier interest rate cuts, right? So from Friday's close into the highs of this move, we got about a 3% rally here as we came into, let's see what the price is, as we came into 2150, right, on the futures, on the gold futures, before pulling back really aggressively. So the anticipation of rate cuts coming out in earlier than expected of next year and next year in general put a lot of upside pressure in this as the US dollar fell as well. So as we look at this, a lot of this is actually spilling into equity markets, right? So the expectations are spilling into equity markets, which is putting downside pressure leading into this as those equity markets are pulling back from those highs on Friday into what we have right now. So a lot of people are looking at this dip thinking that we're going to hold, we're going to buy, but if this offer really spills in, all these bids are going to get sold into and we're going to get some kind of pullback to the downside. So when I look at this, I want to be very cautious coming into this, especially on Friday. A lot of people are going to be very bullish about what is going on, but I'm going to talk about a few different levels on the S&P before we run into this. But there is also some other news here, especially around the labor market, right? 2023 has been a year of a lot of changes, realistically, in terms of the economy and the jobs market. The labor market has remained pretty tight, despite the Federal Reserve's tightening cycle, prompting some profound changes in hiring practices, gatekeeping in HR circles, right? And under discussion is the value of a diploma as well as the time and cost that come with it. And if more can be done to open up industries to the nearly 80 million workers in the US labor force that do not hold a college degree. So IBM was one of the first pioneers to move away from bachelor degree requirements to broaden its talent pool back in 2016. CEO Ginny Rometty coined the term new-collar workers with the aim of hiring cloud technicians, database managers, cybersecurity personnel, and user interface designers, along with other types of ID positions. So the decision also helped pave the way for people to be eligible for higher-paying corporate job skills through mastered outside the traditional 4-year college work frame, which could be combined with on-the-job training, apprenticeships, and a path towards new skills as employees settled into their roles. So IBM in 2021 stripped bachelor's degree requirements for more than half of its U.S. job openings, and it said it will continuously reevaluate our rules to prioritize skills over specific degrees. Other companies have followed suit, including Accenture, Bank of America, General Motors, Kellogg's, Okta, as well as some major airlines, American Airlines, Southwestern, Delta, United, Walmart even, and others. So looking at this, the current labor market dynamics are very different than those that emerged in the aftermath of the financial crisis. A 4-year degree now requirement was then seen as a great resume filter for companies that could afford to pick and choose candidates. But since the pandemic, since COVID-19, the environment has gotten a whole lot tighter realistically, and ongoing labor shortages might continue to see relaxing of prior standards. So we'll see how that shifts, especially with technology shifts along with this labor market shift. Remember that one of the criteria that Jerome Powell was talking about earlier this year was that there could be the chance that about 10% unemployment could be triggered before this inflation is subdued realistically. And we're still seeing a very, very tight labor market as we come into the jobs numbers this Friday, so that's very important. NFP job numbers come out, and over the past year they've been fairly solid in terms of expectations. However, the total addition of jobs has been less than the average, it would seem. So as we look at this, right, we have to take a look at yields, we have to take a look at treasuries, we have to take a look at gold, like a lot of commodities, and the equities. Equities and everything is turning into a spill as we start the U.S. session today. If we take a look at the U.S. 10-year here, It's catching somewhat of a bid after that spill. Remember my target, I've talked about this a few times, between 4 and 4.2% on the US 10-year to cause some kind of hold and potential pullback in the bond market, right? TLT has been doing pretty well. Longer term bonds, I think they still have a very solidified potential long play coming into the new year, into 2024, into that year. But I think it's still going to be a struggle with all of everything that's going on economically, monetary policy-wise, so on and so forth. So there's a few more things before we take a look at the U.S. equity market in terms of the ES futures to start the day. And one of those things, realistically, is going to be Bitcoin, right? So Bitcoin, let's take a look at this BTC USD here. BTC USD over the past several weeks, right, has been climbing into what a lot of crypto people are calling the new bull market. We saw spot gold climb the fresh new highs, like we talked about, into 2100. The futures, I believe, was it 2150? Can't remember exactly. But Bitcoin breached the 40,000 level, marking its highest level since April 2022. The continued military conflagrations in the Middle East and in Eastern Europe, economic recessions fears, and increasing likelihood of lower rates have converged to make gold a high probability candidate for a higher price in the next few months. That's what a lot of analysts and investors are looking at right now. Bitcoin's rally was also spurred by the imminent approval of applications for ETFs tracking the top crypto's price, with some betting that the SEC's not as soon as next month is going to come. So crypto-related stocks are also trading higher, including Coinbase, Mara, Riot. They've been doing so for a few months now as a cyclical shift has taken place. So why don't we turn our heads over to the U.S. equity market here. We'll take a look at the ES futures that are taking a pretty big beat down, right? On a daily basis, we opened up on Sunday and we've pretty much been offering the whole session, right? There hasn't been too much of a bid that kind of opened up on the overnight session, right? Especially with this most recent spill in the gold market. So as I'm looking at this, right, we have a level into the mid 70s to low 80s. I know, I understand it's pretty wide, but if we put a region right here around this 75 to 80, let's say, this is going to be a key block for the bulls to actually accept. There was a plethora of buying, massive bids that came in on Friday's session from that 80 level, spurred a lot of this upside, but right now, as we're offering below it, what seems to be the case is that we're starting to shift the order flow balance here, and a lot of the sell side's coming in, especially on the pressure that we've seen in the gold market based on these interest rate expectations. So the way I see it is, if we can't bid above this 80-81, I think that a lot of these rallies are going to be sold to begin the week. And this week, I am still looking for a little more of a sideways movement to kind of trickle up higher, but this new information that came into the market is going to change that narrative. So if we see a pullback realistically, that pullback can come this week or next week, but it's going to be very important around this 45.80-ish, high 70 level in the S&P 500 futures. So let me just open this back up with this nonsense, right? It's a lot here, I know, but I just have this one monitor. The other ones aren't really going too crazy. My EMAs. Good morning, everyone. I don't really use EMAs. I guess like a 208, but those are more for longer term stuff, to be honest. But I don't really use EMAs for trading. One of the EMA things that I do look at is when the 8 crosses back above the 200 for long-term positioning, right? I'll just buy SPY or like SPY ETFs. So with that being said, let's open up our live trading room today. Hope you all have an amazing Monday. Check that out. We're starting our live psychology course today at noon, and I hope to